I'm here.
Hey, thanks for calling in.
You're welcome. I'm glad to be here.
You are wonderful. What did you want to look at, or?
No. I just want to give you a big slobbery virtual kiss.
Oh.
I can't tell you how excited I am about your system. I can't tell you how much it's meant for me. I made $23,000 in about a month's time with your system. I do not have one single position that I've lost money on.
Oh, you're too nice.
I am just stunned. I am a moon lover.
It is now time for The Trader's Edge with your host, Steve Rhodes.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes! Unbelievable.
Now, Steve Rhodes.
Good morning, all you wonderful money masters out there. Welcome. I'm Steve Rhodes, host of The Trader's Edge, and good morning to you. Thanks for joining me. It's such an honor, such a privilege to be here. You know, last night we were taking a look at our version of the Nielsen ratings, and this show just simply continues to grow, and it's really exciting. You know, I absolutely love doing this, and I'm just simply so honored by your presence, and I love the opportunity to serve you, and I can't thank you enough. You know, it was just exciting to see the growth that we're having here throughout all of TFNN. You know, it's so cool to be a part of growth, you know, and I can't thank you enough for it. And today's going to be a special Friday. I think every day is special, but really special because you're here. And, you know, today with the markets being up, the futures being up, I'm going to show you what's there. I want to be able to give you the gift. You folks have given me the gift of your time. And, you know, time is something you can't get back. Money, I can teach you how to make money back in a heartbeat, but time you can't get back. And I really do value your time here, and it's just exciting, and, you know, if you can help us to continue growing, that would be wonderful. You know, just please tell somebody about us because, you know, especially, you know, I kick things off for our show, and I think differently, if you will, and hopefully, well, I know just simply from the feedback I get, from the emails, the telephone calls that we have, that is helping many folks out there just simply to think differently, because actually when you trade these markets, you've got to think differently. When you're trying to excel, when you're trying to set yourself apart from the pack, when you're trying to be outstanding, meaning you want to stand out, you absolutely have to think differently. You know, and successful people do the things unsuccessful people don't. And I know that it's such a great energy to be a part of this entire group. I just wish there was a way to be able to see all of you folks. Look, there's technology out there, and probably, you know, we're not that far away from, you know, having a wall full of people watching in or what have you. But, you know, just to create a nice environment. But, you know, thank you so much. We're starting my day off, you know, looking at my favorite place on the planet. It's always so good to create a vision for your day, to find something to give you that sense of energy, whether you're just waking up and it's just stretching or a deep breath. You know, you want to be able to change your state. You want to be able to put yourself into an absolute peak physical, mental state of mind. That's how you should trade. It's how you should absolutely do anything in life. And so, you know, it's Friday. It's amazing how fast time flies. And so it's sad that it's Friday. It's great that it's Friday. You know, most folks, it's a good time to just simply get away, let your mind get away from the noise of the markets, if you will. You know, do something with the kids or something for yourself. You know, give yourself a gift. Well, today, I plan on giving you a number of different gifts. And mostly because the market is presenting those to us. And I'm going to do something different. Typically, some of the things that I'll be sharing with you today are really the things that I do just simply for my clients, for my subscribers. But a day like today, I just felt like was so jazzed up last night. Went down to a jazz festival that they're having here in Clearwater, just listen to some music. If you're in town, you know, at a great setting, you should absolutely go do that. But it was jazzed up, if you will, just simply about taking a look at the impact that we seem to be having, the folks that are logging into TigerTV. In fact, you should absolutely go to TigerTV and watch this show, because you'll be able to, you know, learning is visual. And I'll link the known to the unknown as much as I possibly can, because when you do that, folks, that's how you really speed up learning. So if you're trying to teach something to somebody else, link the known, whatever it is that they might know, to what it is that you're trying to teach them. And they will be able to grasp it, you know, much, much quicker. And so, you know, we'll be doing that today. And so let's go ahead and just, let's get right to it, if you will. And our number, 877-927-6648. And again, go to TigerTV. You can watch this show live. You'll be able to take a look at my charts because learning is absolutely visual. If you're listening to the audio archive, this is archived on channel 14. And so, take your time, go log in, and check that out. Now, right now, what I've got up on my screen, as we do normally, as we go around the world, just see what's going on. You've got our Dow futures are up about 130 points. You've got the S&Ps up 15, NASDAQ up 26, and one would think that all the problems in the world are gone. That's not the case. It's absolutely not the case. If we take a look at the DAX, all that the DAX is doing right now is just simply coming up against its swing point here from August 15th. This is where we see a market turn, if you will, and swing points are at highs or at lows. In this case here, you see one on August 15th. You see one down here where the market came down and then it moved up, and you see that on August 18th. And right now, what the DAX has been doing is just simply bumping up against this swing point for the last 3 trading sessions. So that's what, if we take a look at our index futures here, so right now what I'm going to do is I'm going to pull up on the screen, I'm going to pull up the S&P futures. This is the E-mini daily contract. Now, what I want to show you is that all we've done so far today in overnight trading is we're coming up against the highs that we made on the full moon, if you will, October the 12th. That was 2 days ago, and we're just simply, challenging those highs. But what we're really doing, and we're challenging this little swing point out here from September 20th, we're really coming into this area. And so what I've got identified for you here is what's called a bearish engulfing. And a bearish engulfing is where the candle of this the body of this candle right here, which happens to be September 1st, totally engulfs the body of the prior session. Now, this was an up candle. It's green colored, if you will, on my charts. Hopefully, that's what it looks like on your TV as well. The bottom of the candle, the bottom of the body, if you will, is where the green starts. The top of the body is where the session closed. Those wicks in between it are the high and low intraday during the trading session. The following session, what you can see is that red candle completely engulfs the other candle. That's telling you, that's a signal that the move might be over. Now, many times the bearish engulfing candle, where you're looking to be able to place a trade, is when the market is challenging that. Some people will go ahead and jump on board as soon as they see that the next trading session and go ahead and ride that down. Others will wait, kind of like it's a breakout area, if you will, a version of a breakout or a breakdown area in this case. And so one thing to do and a way to trade it is wait for it to get challenged to see if it holds as resistance. You can see the market came up here on September the 16th, started, got into about the midsection of the body, went ahead and gave it up the next session, came back the following day. We had this little doji candle here, and oftentimes, during a move up, if you will, and this is what the market was doing here, these doji candles can also tell you, especially during an uptrend, some folks will take a look at it as being the middle of a move. I also take a look at it as saying the move is exhausted. The bulls and bears, the bulls in this case here, have kind of lost control, and especially when you get a doji candle that's coming into a bearish engulfing. So you want to be able to put these things together. This is a roadmap. It's easy for me to be able to teach you how to do that. I teach my newsletter subscribers how to do that, and you can see that, we haven't even been able to challenge the top of the candle. This is really resistance. I couldn't get bullish on this move here until we move clearly with conviction up above this area. It's been challenged. Maybe it's being challenged today. Maybe the top of it will get challenged, but not until we punch through there with conviction, some other candle, some other volume. If we take a look at that in our marketplaces, would I start to take a bullish look to it? Because everything that's here, and that's why we want to teach you this roadmap, everything that's here still has in place that we have a turn from the full moon, even though it's being tested for a few days. That's okay. That's, in fact, I'm going to show you a chart that shows you that that's what you could have expected the last time that we had a full moon. And actually, one of the things that I'm going to do today is for those of you folks that haven't taken a trade in going short, this is where your back is up against the wall. So I'm going to give you a trade. This isn't even a trade that we have in our newsletter. We're pretty much fully invested as far as I want to be from the short side of this. But I want to go ahead and actually give you a trade. I want to show you how we're going to set it up. And we're going to spend more of our time doing that on next Wednesday from 6:30 to 7:30. We've got a free webcasts that we're doing, and it's all about putting all this together. A tool that I've created for everybody to be able to use with inside the listening audience, whether you're trading your system, you're trading a newsletter subscriber system, whatever it is you're trading, this tool, which is called position sizing, is what you want to understand. And you want to understand this 1% rule. In fact, I'm going to switch over right now to the 1%. Maybe you've heard the new commercial that I've done, and I want people to I want to be able to link the known to the unknown. So some of that is absolutely visual. So I want to show you what it is that I'm really talking about here. I didn't get a chance to really blow this up, so hopefully you can see this clearly on the screen here, and you'll get the idea. Now, this is where I'm just simply starting with an investment balance of $10,000. And the trading system that I have is you don't risk more than 1% on any trade. Doesn't matter whether you have 10,000, whether you have 200 million, whether you have 2 million, 50,000, whatever the number is, you don't risk more than 1% of your trading capital. So in this case here, that would be $100, right? 1% of 10,000, $100. The side on the left is my losing side, if you will. The side on the right is the winning side. You hear me talk about how you can double with just a 2-to-1. Now this is if you win, okay, if you risk $100, you're going to get $200, okay? And if you risk $100 and you lose, you're going to lose $100. So our losses, we lose exactly what we wagered, we put up as our risk. Our wins, we get 2-to-1, meaning we risked 50 cents, we got $1 per share on the stock. As far as profit, we took our profits at 2-to-1. So hereafter, in this number right here, 1 through 18, it continues on down. So just through 18 trades, if we had 18 losing trades in a row, and all you risked was 1%, meaning the first time you risked $100, the second time you risked $99, what you would still have in your bank or your trading capital be 83%, a little over 83% of what it is you started with. So your loss on 18 losing trades would be, a little over 17% or just a little bit less than 17%. If you had those same 17 winning trades in a row, your profit would grow to 43% of what you started. You would have started with $10,000. After the 18th trade here, you would have a balance of $14,282. I want you to understand the power of 1%. I want you to understand how what in your mind risking 1% is so little can turn into be so much, and how risking something that you think is so little actually is so little, and therefore it gives you the peace of mind to be able to trade. It gives you the peace of mind to know that you haven't gone for broke, because when you go for broke, folks, when you focus on something, you get it. And I don't ever want you to go for broke. You don't need to go for broke. I want you to really think about this power of 1%. When we come back from our break, we're going to take this, we're going to take a look at the markets, we're going to take a look at a trade setup that's out there. You're welcome to call me 877-927-6648. I want you to absolutely join me on Wednesday. I want you to tell some friends, folks. I'm going to give you some gifts today. Give them a gift. Give them a gift to understand this, because we all need to be able to take that money we've got and put it to work. Thanks for joining me. We'll be right back. 877-927-6648.
Yeah, it's always better when we're together.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Don't forget, you can test drive all the newsletters for free at TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. 877-927-6648. And thanks again so much for joining us. Now, what I want to do is I want to continue on with putting this all together. I want to continue on with providing you with a gift. We're actually going to be trading live here. The markets will open when we get back from our next segment. And so it's really ideal because this is a situation where we've got our backs up against the wall. And you can take a look at this trade. You can determine whether or not you want to take it. I want you to understand that 1% rule. You first got to fully understand that 1% rule. I only want you to consider taking this trade if you're only willing to risk that 1%. And we're going to talk about how to do that throughout this show. Now, what I've got up on my screen here right now is the S&P 500 daily chart. This is the SPX chart. And what I've got is I've got a couple different candles. I've got 2 bearish candles that are identified and 1 bullish candle. And you want to understand this. So remember on the S&P futures contract, we were identifying a bearish engulfing. Well, we've got that same candle right here, occurred at the highs. This is the August 31st date, which we reference as a swing point. You can see how in the following trading session, September 1st, this body fully engulfed the other body, closed at the low. That was a very bearish sign. The market moved down a couple days, if you will. We moved back up. And we move back up and so the top of this line area here, and it's really, it's really the top. I'm using the top of the August 31st area, top of August 31st, the top of the September 1st area. That really becomes a resistance line. When we're trading, we're not looking to be exact, okay? We're looking just simply to be outstanding. When you have outstanding trades, you will get incredible results from it. So we're not looking to be exact. When we talk about retracement areas, specific lines of resistance, we're not looking at it, I'm not looking at it to the penny, to the dollar. We're just looking at a range, and that's simply how we also trade. Now, we have this shooting star that's out here, which came in on September 20th. Shooting star is the opposite. It's the upside-down version of the hammer. And so you know, if you've been listening to the show, how we talk about the strength of a hammer, well, when you flip it, you also have the strength of that inverted hammer, if you will. So we've got really two lines of resistance. You can see how on Friday, on Wednesday's trading session, on full moon Wednesday, how the market moved right up into that first area of resistance and gave it up. Well, we're going to see today when the market opens, we're going to see this area start to be penetrated again. So we're going to be in an area where your back is up against the wall. If you had a bearish outlook, or you had and I'm going to put it all together for you so you can understand probability-wise what it is that we're looking for, this is the time where you would want to be putting on a short trade. We want to, especially when we're inside this consolidation range. Now look, if we break outside of this consolidation range, I will change to a bullish opinion. But until we do that, because of the setup that we have here, we have to look at this area is likely going to hold and will move its way down to the bottom. Where would it be that I would go bullish? Well, this blue line that I've got in here, this is the March 16th low. If I take this back here, and you may remember, those of you that have been trading the markets, this March 16th was where we had a big volume down, if you will. And I think it was March 19th, March 18th was when we had that super full moon. The market moved down into this. We had good volume. We ended up breaking that when we came into the August 3rd time frame. And so this area here is also going to be another piece of resistance that you have. So you've got resistance right in this level here at the shooting star, right in this level here where we've got our bearish engulfing, and right up here in that March 16th. I will turn as bullish as possible when we break through that March 16th area on conviction, especially if we do it sometime within the next couple of days, knowing that we've got this big cycle date that's coming in on October the 26th, our next new moon and apogee and a 17 planetary index date. So here's the setup. Now, here's a bullish candle. This is not the hammer, but it's a piercing pattern. And this is where the candle, where this green body pierces truly inside, more than halfway into the candle from the prior session. And that was a bullish candle. But you can see how the market moved up into resistance and gave it up. So we're going to see this live. So now, why is it that I believe the way that I do? I'm going to show you an updated lunar trading strategy during this consolidation period. Now, this is something that my subscribers see all the time. I'd love for you to be able to test that out because, you can see what it is that we look at, how it is that we trade for 30 days, risk-free. You're just simply putting down a credit card for 30 days. Take a look at everything it is that we do. And what you're looking at right here is the aspects of the lunar trading strategy that have been working so beautifully since we've had this consolidation period. It goes even further back than that. You can see each of these, and I'm showing the third quarter moon, the first quarter moon, apogee, full moons, new moons. You can see at each of these levels here where we've had resistance, where we've had market turns as market's been moving up. And in this case here, what we're looking at is the last time we had a full moon cycle. You can see that we had a 3-day trading session before the market went down. Well, where are we today? We're going to be in that same 3-day trading session, folks. So that has been working well. 877-927-6648. We'll get back. We'll go to Doug.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. 877-927-6648. And we're off to the races. We got the Dow up 111, the S&P up 16, Composite up 38, Russell up 8, and the NDX up 37. Got a strong market and coming up against that first area of resistance on that shooting star. Let's go to Doug in Colorado. Doug, thanks so much for holding. I really appreciate that.
Absolutely. Thank you for taking my call.
My pleasure. My pleasure. You wanted to take a look at the dollar index.
Yeah, I did. And, that's kind of part of my question. The rest of the question kind of has to do with, who's the big dog in this, determining which direction the market's going to go. Because I've heard, like Google came out with some really good earnings yesterday. And,
they did. Wouldn't it be nice to do that with the company, huh?
Yeah, Google owns the Google owns the market, and then a couple of days before that, it was, Apple drives the market.
Yes.
And and the dollar's king. I still think the dollar is the big dog, but I kind of wanted to get your take on that. Kind of how these things compare against each other, and how a rising dollar might influence the market compared to rising, positive earnings statements coming out from several companies.
Well, my take on that is, everything is, right now you've got a good correlation. You've got the dollar down. It's trading at 76.85. It's down 43 ticks right now. And, everything is still, ever since the ever since we started flooding the marketplace with dollars, when we had QE1 and QE2, it really changed the landscape. It changed the game, if you will. And what was engineered, if you will, was a weak dollar so that we could have strong exports for our products, so that we could have strong earnings in our company, so that we really could go ahead and move the Dow up. If you go back, in fact, if you Google, Greenspan on 60 Minutes and other places, you'll hear him talk about the importance psychologically, of a strong market, what that actually does to folks out there. And so, that was one way. There were two ways to do it. There was a way to change the way that you value items by going ahead and putting more money. It's like having a monopoly game, if you will. And, you start with a certain bank. And now you go ahead and you had a second monopoly set off to the side, and you get rid of the pieces, but you keep the cash and put it in the first game. You could play that game forever, if you will. It just extends it. Eventually there's going to be a winner. Eventually things will get back to, par. Things will rise in price. Instead of paying $750 if you land on Park Place, you go up to $1,500. That's really what's happened in this marketplace. But you have to be aware of it, certainly from a trading standpoint, as far as, what's going on. If there's another QE3, for example, then I'm on board being long until that QE3 ends from a marketplace standpoint, because the market will continue to go up on light volume where you've put more money into the game. I see a text message that came across my screen just as we were coming back on the air that Timmy Geithner says the U.S. is now stepping up to help Europe or what have you. So what does that mean? Does that mean we're going, how is that going to be done? What's that process? So we want to be, pay attention to those areas. But mostly what I like to do is I like to take a look at technically what's going on. Forget about all the outside world, because there's enough information in these markets that we trade to tell us what's going on. When we started the first two segments, and I really do appreciate you holding on through those, when I take a look at the SPX, which we're looking at right now, it's trading at 1220.40. When I see that that's coming against two areas of resistance, that bearish engulfing, that shooting star, coming into that also that full moon area, I know this is the place that until this area is busted, this is where you want to be putting on a trade, where you want to be able to go short and use that 1% rule. When you do that, it frees up your mind to look at the charts and just simply trade what the charts tell you. Does that help at all?
Yeah, it does. But still, it still sounds like the dollar's
king. Absolutely.
You can't ignore what's going to happen to the dollar.
No, I'm not ignoring it at all. We'll be right back, folks. Yeah.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments and Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how. At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by South American Silver Corporation. For more information, just click the South American Silver Corporation banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. 877-927-6664. You got the Dow up 113, S&P's up 16. And we're going to go back to Doug from Colorado real quickly here and just finish up that conversation. So you absolutely do have to, you pay attention to the dollar. But as far as what controls what, I take a look at the patterns in what it is that I'm trading. So I don't trade the dollar index. I trade currency, so I don't mind trading the currency pair, the euro, the yen. In the dollar index, you've got 40+% is inside, I think 40 to 60% is the euro. So I pay attention to it. But when I'm inside a chart, let's say if I'm trading the S&Ps, that's all I'm really focused on is what's going on inside that chart pattern, what's happening with regard to volume, what's happening as we come into swing points, what's happening with regard to, let's say, just simply, I'll put more weight on a lunar trading strategy that's been working, that is clearly identifying turns, and I will be worried about what Timmy Geithner's going to do, what the Federal Reserve is going to do, because there's more information that I have from a trading standpoint. I'm always looking for our back is up against the wall to place a trade. It is so, whether it's a pattern, whether it's a Gartley, going against a swing point, a butterfly, whatever it might be. Does that? I'm trying to help you out here.
Absolutely. And as far as the dollar is concerned, if we were to ignore whatever Tim Geithner might do, because he have no control over that. But if you just look at the dollar from a purely technical point of view, what do you see in the coming days?
Well, from the dollar standpoint, I see, with regard to days, I'm taking a look at a little bit longer term picture. The dollar is getting stronger and is going to continue to get stronger. I see that unless there is some type of QE. When I see a message come across the screen that says, we're going to help Europe, I don't know what that means. I do know that, and as I opened up the show, that there's a trade that I want to be able to give to folks where the back is up against the wall in a 1%, and it was really dealing with the S&P. So that's really what I want to be able to focus on, because it's all about making money and getting rid of all that noise. And our screens, for me, the screens are a way of getting rid of the noise of the world, because there are definitely patterns that are here and ways for people to make money. And if you took a look at that 1%, when I took a look at, if you had 17 or 18 losses, you still had 83% of your capital. But if you had those same 17 wins, where you had risked 50 cents, got $1, you made 40% on your money, that's what I want people to understand, is how to play this money game. You don't need all trades to work. In fact, on a 50-50 basis, if you only lost, if you made twice, on your winning trades, you risked 50 cents and you got $1 out of it, and when you risked 50 cents, you lost 50 cents, you would be so much further ahead, you would be amazed. So I want to teach people that piece of it, okay?
Okay.
Yeah, and I think that's, that way it's good conversation with regard to what might be going on. But I do think that the dollar is getting stronger over time. And we've seen that, and with all the problems over in Europe, why is the U.S. helping Europe? They're in big problems over there. Big problems. Absolutely big problems. So people are going to run to the U.S. dollar. And that's going to put pressure on the U.S. markets for some time to come. Okay?
Yeah.
My thoughts, at least.
All right. Well, and I don't know how much time you want to spend here, but, one other thing would be, for this breakout that you're talking about, for the market to break out above the March 16th low.
Yes.
I mean, if you were to rub your crystal ball, what do you think would have to come into play to make that happen?
Really no idea. And I would just prefer to just, is if it happens, then it's easy for me to reverse. I'll be taking a look at maybe candle patterns, or I'll be taking a look at volumes. But I know that if this area here doesn't hold, that's absolutely the next area of resistance. We break through that, and then I take a look at, whatever might be going on lunar-wise or what have you, just other patterns. Maybe, is that making a Gartley pattern? There's just other elements that I want to be able to put in there that just simply put the trading advantage in my favor. And, I've always felt that a competitive advantage is a great thing to have. And learning these markets, learning these charts, that, in my opinion, is a competitive advantage. Much more of a competitive advantage than everything else that's on, the world and the news and the newspapers, from my perspective, because this is the way to make money. So that's what it's all about. So, it's great to talk to you. And I would, if I didn't have a vision, all morning while I was kind of up, from 3 to 6 or what have you, about what I wanted to be able to do. I saw what was happening in the markets. I want to be able to give people a trade for them to consider. So I'd like to get through that. We've got 2 minutes here in this segment and then only about 4. So it's great talking to you. You can give me a call back anytime you want. Would love to hear from you. Thanks so much. You have a great weekend, okay, Doug?
Thank you so much for your time, Steve.
Yeah,
Appreciate
you bet. Okay. So, folks, I want to get back to this because what you can see is I've got that SPX chart up on the screen. You can see we're coming right into that first area of resistance here, that shooting star, if you will. So it's even got further to potentially go to get back into that resistance area until, as we were talking about with Doug, until we punch through that March 16th area. I'm a bear. And, but I will change. But here is what you're looking for. You're looking for an area where your back is up against the wall. So where would you go from here if you were trading the SPYs, if you're trading the S&P? You'd go take a look at the SDS, folks. And right now, it's trading off at 21.59. And we'd want to do is we'd want to go take a look at volume in the S&Ps. I'm going to just skip to, if you were going to go ahead and place a trade right now and use a wide enough stop, what would you do? Well, one of the things you'd want to do is you'd want to use the position size calculator, and that's why I want you to go ahead and sign up for the course that we've got coming up next Wednesday from 6:30 to 8:30. Go to the front page of TFNN.com, sign up for it. You're going to get an email so that you can opt back into it, and it's going to be a great hour. And one of the things we'll do is we'll spend more time on the position size calculator that I have here, and it's very easy to use. What you're doing is you're basically entering the symbol that you want to trade, whether it's an index ETF or a stock, because there are certain rules with regard to how much risk of your total portfolio you want to put out there. When I'm talking about 1%, folks, of risking 1%, I'm saying you take 1% of your trading capital, in this case here, on $10,000, it would be $100, and you would figure out what your stop is. Well, when we figure out your stops here on this calculator, this is why it can be used for all systems, you really want to understand volatility. Today there's volatility. Yesterday there's volatility. We're in a huge market with volatility. Well, one of the things that this automatically calculates for you is the average true range. That is the volatility of whatever it is that you're trading for the last 10 days. And you want to absolutely understand that, because if you've put all your work together and you're entering the trade, you don't want to be stopped out on the day just simply with inside the volatility, because it would assume that you know exactly where the market's going to go. You don't, I don't. We have these ranges. We have these areas. We look for our back to be up against the wall. In this case here on the SDS, the average true range for the last 10 days has been $1.20. We get back, we'll go ahead and we'll finish this up. And thanks so much for being here with me, folks, and we'll be back in just a few.
Well, it's always better when we're together. Yeah, it's always better when we're together.
As Tom says, go long America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, before October 31st from your local Barnes & Noble store. And you will be given access to not just one, but 2 exceptional archived courses. Tiger Scaling, the Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses. Keep money in your community and get a great education. But be sure to act now, because you only have until October 31st to take advantage of this opportunity. Go to the front page of TFNN.com for details.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Go long, America! Purchase Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, before October 31st. You will receive in excess of $300 in trading education.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. 877-927-6648. Absolutely stay tuned. Following this show, you've got Tom and I in the Money Masters show. And in the on-deck circle, we got Mr. Basil Chapman. I hope the Detroit Tigers, they draft Basil because he can help you hit it out of the park. And the Tigers probably going to need some help going back to Texas to play 2 games over the weekend. Then after Basil, we've got our health expert, Nico DeHaan. Then David White is the warm-up jazz band for Tom today from 4 to 6. So a lot of great programming. And so let's get back to this trade here. We just really have just a few minutes. Again, we got our backs up against the wall. I've shown you all the support, what the charts are really telling us. And it's not really me that's bearish. It's the charts that are bearish. And I just simply trade the charts. When they go from bearish to bullish, I flip. And that's what I want you to be able to do, too, because this is the money game. It's volatility. It's a way to make money. When you really understand that 1% game, folks, it'll totally change the way that you trade. You will be amazed at what you can amass, and you will be amazed just how easy it is that you can sleep. So I want you to tell others about it. We're looking at the screen here. We'll spend more time on this next Wednesday. But what I want you to understand is you want to be trading. You want to understand what that Daily volatility. If you're trading intraday, you want to know what the volatility of those last 10 candles are. In this case here, we're just simply trading on a daily chart, and it shows that for the SDS, the volatility, the average true range is $1.20. You want to have a stop someplace outside of that. In this case here, this would be a relatively tight stop. This would only be 10% outside of that, making it, instead of a $1.20 stop, this would make it a $1.32 stop. Once you have that, folks, then all that you're doing is you're just simply taking your risk. In this case here, we had $10,000 in trading capital, meant our risk was $100. You're basically dividing that $100 times $1.32, and that tells you how many shares you should buy. In this case here, the calculation would be 76. Your work is done other than going ahead and placing the order, and so you don't buy 76, buy 75. Or you can round it up a little bit. You're using that 1% as a guide, if you will. But in this case here, I'd place an order for 75 shares on $10,000 worth of capital, and my estimated entry would be right around 2163. I did this before the market opened. We'll go see where it's actually trading. My exit, my minimum target on this trade is 2561 if this works. Well, at 2561, folks, that gives you a 3-to-1 reward to risk. Where I think if this trade really works, where it would go to, not 2561, but 2816, I just simply can hit my calculate button. It'll go back up here and tell me that it's a 4 or 5-to-1 reward to risk. Doesn't change the position size, just simply gives you an idea of all the information that you need to trade. So that is a trade right now that I'm suggesting that you would want to take if you also are in the same camp and taking a look at this market. It's trading at 2171. It got down to a low of 2158. I had estimated at 2163. That's not too bad. Considering I did this at about 7:30, 8 o'clock in the morning, and so you've got to, it's where your back is up against the wall, and that's absolutely what you want. If we go back and we take a look at the index here, and then I'll switch over, we'll take a look at a quick chart on the 10-minute chart. We'll see what kind of volume it is that we've got in here. You can see how this area is holding, and if you're only risking 1%, why wouldn't you do it? Why wouldn't you take action? Is it, what's the fear? It's always the fear of loss. I can help you overcome that fear of loss, whether it's subscribing to my newsletter and the systems that I put in place. Please attend the Wednesday webcast, or tell others about it. Tell others that you know that have cash that are sitting on the sideline. Go listen to this 1-hour webcast, because this guy can get them back into a market, can get them doing something other than just sitting on the sidelines. There's no reason to sit on the sidelines. I'll get you to overcome that fear. You know why, folks? Because you've got an amazing power within yourself. That power is so strong. I mean, it is so strong, folks, it'll bring about miraculous outcomes. And the best one is it'll turn you into an incredible money master. Thanks for joining me, folks. I'll look forward to seeing you Monday, but I'll see you in about 7 minutes with Tom. Stay tuned.
Yeah, it's always better when we're together.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home.